If you've got a mortgage right now, the chances are you feel like you're paying a mountain in interest to the banks and barely making a dent in the loan. And the sad thing is that most people think that the only way you can get ahead on your mortgage is to earn way more money. But this simply isn't true. There's a whole bunch of simple things that everyday Australians can do to pay less interest to the banks to get ahead on their mortgage, and most of them don't require a big pay rise. In fact, I truly believe that with the right strategies and intent, most Australians could pay off their home loans inside 15 years and save themselves literally hundreds of thousands of dollars in interest in the process. How do I know this? Well, I have been a personal finance and investment coach for over 30 years, and in that time, I have seen literally dozens of my clients pay off their home loans inside 15 years. And in the last 12 months alone, 9 of my clients have achieved this lifestyle. So, is it possible? Absolutely, but as I said earlier, it just requires the right strategies and intent. So in this video, I'm going to share with you 9 very simple mortgage hacks that anybody can use to pay their home loan down faster. Now, I suspect that you are already doing some of these, but I would virtually guarantee that you're not doing all of them. And it is the cumulative effect of all of these strategies consistently applied that will give you the outcome that you are after, paying off your mortgage inside 15 years. Now, strategy 8 and 9 alone, if you're not doing them already, in combination will allow most people to pay off their mortgage in half the time. So please make sure you stay tuned to the end. And if you would like a copy of my mortgage crushing strategies checklist, then check out the link in the description below. So let's have a look at what we're going to cover in this video. Firstly, we're going to have a look at how to approach the banks to get a better deal. Then we're going to look at the best way to use offset accounts. We're then going to find some lazy money so that you can pay your mortgage off faster. And then we're going to look at simple strategies that will allow you to pay your home loan off years earlier. So let's have a look at hack number 1. And hack number 1 is to ask your current lender for a better deal, for a better interest rate. If you haven't done this in the last 18 months, now is the time, because we all know that the banks offer new customers better deals than their existing customers. So they have the capacity to give you a better deal. You just have to ask. And the best way to do this is do your homework first. Type into Google best home loan rates in Australia, and then some comparison sites will come up. Comparison sites like canstar.com.au or money.com.au or finder.com.au, and there they will have listed the best rates available with each of the banks at the moment. What you want to look for is, are those rates 0.3% or more less than what I'm currently paying? And if they are, you then need to speak to your bank and say something very similar to what I've got on the screen here. I'm reviewing my home loan. I can see that bank X, Y, and Z are all offering lower rates than the one I'm on, and I would like to know, can you offer me a better deal? What can you do for me? And don't be afraid to push. Because the people on the end of the line, they're just there to do a job. It's not their money they're giving away. They're just there to do a job for the bank. So make sure you ask the question and don't be afraid to push for a little bit more. Now, if the bank can't offer you a better rate, then perhaps it is time to move banks. The banks are not loyal to you, so please don't feel like you need to be loyal to them. But one word of caution, if you are going to move from one bank to the next, just make sure that the cost associated with moving beats the lower interest rate. This means you need to look out for a potential lender's mortgage insurance. So if you've got less than a 20% deposit, you may be up for lender's mortgage insurance again. Make sure you understand if there are break fees. So if you've got a fixed rate loan on your current loan, you may not just be able to leave without paying break fees. Make sure you know what the discharge fees are. Make sure what the application fees are. Make sure that there are no internal switching fees. The big question you have to ask yourself is, will I be better off with the new bank after all these costs are factored in? Hack number 2 is to switch from paying your mortgage monthly to paying your mortgage fortnightly. Now, I understand that many people have heard of this. The problem is most people do it wrong. What you want to do is look at your monthly payment, divide the monthly payment in 2. So let's say your monthly payment is $2,000. You want to divide it in 2, so you've got a fortnightly payment of $1,000. And if you do that, Over the course of the year, you will end up making 13 monthly payments, or the equivalent of 13 monthly payments, rather than 12. However, if you say to the bank, hey bank, I would like to change my payments from monthly to fortnightly, they will actually reduce the fortnightly payments. So it won't be $1,000, it'll be less than $1,000, so that you're still paying off the same equivalent of 12 monthly payments. So make sure you make the adjustment and not the bank. Hack number 3 is to use offset accounts properly, to use them the right way. Now, let's start by having a look at, well, how do offset accounts work? Well, this is the average Australian home loan right now, $600,000 at around 6% interest, which means you're going to pay $36,000 a year in interest. Now, many people do have offset accounts. They've got a savings offset account and they might park their savings in there. So let's just say we've got $20,000 sitting in that offset account. That means that the bank considers that $20,000 off our home loan, so we're only paying interest on $580,000. So we can see here at 6% interest, we're only paying $34,800 in interest, which means we're saving ourselves $1,200 a year for using that offset account. Now, that's fantastic because that $1,200 is money we've saved, not earned, and therefore we don't pay interest on it. So it's well worth having a savings offset. But the way that I get my clients to set up their offset accounts is like this. Same loan, but instead of just having a savings offset with our $20,000 in there, we also have a bills account that's an offset account, and we have an everyday discretionary account, which is an offset account. So all of our available cash is basically sitting in offset accounts. So this means we've got $37,000 there in offset accounts. So the balance that we pay interest on is $563,000, which means that the annual interest is $33,780. So that saves us $2,220 for money we've got to have sitting in accounts anyway, but it's saving us interest on our mortgage. Now, let me just show you the impact of this, because $2,200 may not seem like a big amount of money, but when we look at it, loan amount $600,000, having that money sitting in the offset account is the equivalent of making a one-off $37,000 payment, if you like, off our mortgage, which means that using offset accounts alone will save us 4 years and 5 months on our mortgage and $156,000 in interest over the course of our loan. So I'm hoping you can see, again, the cumulative effect of this simple strategy. And hack number 4, a very simple one, and this is just to round up your mortgage payment. So if the bank requires you to pay $2,143, well, you make it $2,200. If the bank requires you to pay $1,876, then round it up to $1,900. And yes, I know this does require you to find a little bit of money, but you can see we're not talking a lot of money, and yet just rounding your payments up like this could save you a couple of years and tens of thousands of dollars in interest off your mortgage. Hack number 5, if interest rates are on the way down, do not lower your monthly repayments. Now, the banks, out of the goodness of their hearts, they will offer to lower your monthly repayments. In fact, they'll probably automatically lower your monthly repayments. Don't let them do it. They know that if they lower your repayments, they're going to keep you in your loan longer. What you want is to maintain the payments. The extra money that you were paying now goes into paying off your principal rather than paying off the interest, which means you can pay your home loan off faster without any extra effort. Hack number 6 is to throw extra lump sums off your mortgage early if you can. Now, in the first few years of paying off your mortgage, you will notice that, let's say your payments are $3,000 a month, just $300 or $400 of that is actually going off the principal. The rest is interest that you are paying to the bank. So any extra money you can pay off your mortgage early is going to have a reverse compound effect in that you pay significantly less interest over the course of your mortgage. So every time you get a tax return, or perhaps you get bonuses, or maybe you get given some cash, or maybe you've got a side hustle going on, or maybe you could just sell stuff from around the house, an extra few $100s, an extra few $1,000s that you can pay off your mortgage early will have a significant impact on how much interest you ultimately end up paying on that mortgage. Hack number 7 is to commit any future pay rises to your mortgage. And if that sounds a bit steep, then maybe just half the future pay rise to your mortgage. The key thing here is have the discussion before the pay rise hits your bank account. Set up a transfer from your bank account to your mortgage the day your pay arrives so that you never get the chance to spend it and therefore you never get the chance to miss it. Hack number 8, I absolutely love this hack because this is a very tangible hack that has enabled literally dozens of my clients to pay off their home loans in half the time, and that is to double your principal payments. So if we look at the average Australian home loan here, you can see it's $600,000 at 6% over 30 years. The first month's payment or the monthly payments are $3,597. And the interest component of this is an eye-watering $3,000, which means just $597 of month one's payment actually goes to paying off the debt. And you can see because of that, over the course of this loan, you are going to end up paying $695,000 in interest, which is absolutely huge. This is such a big wealth destroyer for your average Australian who allows their home loan to go for the full 30 years. So the strategy here is to go, okay, can I double this principal payment each month? So if we look at that, we say, okay, well, my principal's $597, so I'm going to make an extra payment of $597. If you can do that and say month 2, my principal is now $603, and I can make an extra $603 off that. Next, month 3, it's $609. Can I make an extra payment of $609? And so on. You can see each month it doesn't go up by a whole lot. But if we can make those extra payments, then what's going to happen is you will have your home loan paid off in 15 years and 1 month and save yourself $345,000. Where's my little thing there? $345,000 in interest. So talking about, okay, well, not only have I halved the cost of my loan, I've saved myself $345,000. Now imagine what would happen if I could take that $345,000 or the ongoing payments and put them into an investment, into an index fund, into superannuation. Can you imagine the compound effect of that? So this is one of those small moments in time, one of those little strategies that can literally make $1 million difference to your future. Hack number 9, please stop paying the lazy tax. I see Australians every day who are paying more on their insurances, more on their utilities, more on their home loan than they need to because they've never taken the time to ask the question, can you do a better deal? I would almost guarantee that if you haven't done this in the last 18 months, 2 years, that you are paying way too much, and that just by simply asking a question of your insurance providers, asking a question of your utility providers, you will get a better deal and save yourself hundreds and maybe even thousands of dollars across the course of the year. Hundreds and potentially thousands of dollars that you could use to be paying down your home loan faster. The combination of 8 and 9, so 8, we want to double our principal payments, and finding that money in 9 is incredibly powerful. So as soon as you've made the savings, take that money and pay it off your home loan. Now, I hope that this has been helpful so far. I hope that it's inspired you to take some action so that you can pay your home loan off faster. The banks already have enough of your money. Now is the time to take some of that back. Now, if this has been helpful so far, can I please encourage you to click the like button, because that helps my channel, this content, to reach more families. And please subscribe, because every week I release more practical, no fluff money strategies to help you and your family thrive financially. So please click the like and subscribe. Okay, so let's now have a look at a summary, a quick summary of the 9 strategies. So strategy 1 was to get a better home loan rate. If you haven't done this in the last 18 months, 2 years, now is the time. Step number 2 is to switch your payments from monthly to fortnightly. Now, don't just go to the bank and say, please move my home loan to fortnightly. You want to be able to go, half my home loan repayment, my monthly home loan payment, is what I'm now going to pay every single fortnight. And that will ensure that you end up paying an extra month's payment each year. Step number 2, use offset accounts properly. Don't just have one offset account. Speak to your bank, speak to your financial institution, and get 3 offset accounts so that you've got all your working money also in offset accounts. Step number 4, round up your payments. If you're currently paying $1,750 a month, make it $1,800 a month. Step number 5, keep the payments the same if interest rates go down. Do not allow the banks to drop your home loan repayments. Step number 6 is, where possible, commit extra lump sums to your mortgage. So if you get a bonus at work, if you get a tax return, if you've got a side hustle going on, or perhaps you can sell some stuff from around the house, any extra payments you make off your principal early on will have a significant cascade effect on paying a lot less interest over the course of the loan. And step number 7 is to then commit any future pay rises to your mortgage, or at least part of those pay rises to your mortgage, before you get used to spending them. Step number 8 is to double the principal payment on your home loan each month, where possible. And step number 9 is, please stop paying the lazy tax. Look at where you can find extra money. Stop paying more than you need to your insurance providers, to your utility providers, to the banks. Take that money and channel it off your mortgage. Thank you so much for watching this video. I genuinely hope that it has been helpful and that it's inspired you to get your home loan paid off early. The banks already have too much of our money. We don't need to give them any more. Now, I'm sure that you're probably already doing some of these strategies here, but can I encourage you to go that extra mile and implement the rest? Because it is the compound effect of all of these strategies working together that will enable you to pay your home loan off in half the time. So get stuck into it. Thank you for being here. Please remember, it is the little habits and strategies that can literally make $1 million difference to your future. So take care, and I look forward to seeing you in the next video.